Hey traders, Jason with Day Trading Fearless. In this video, we're going to talk about if this is the end or is it just the beginning. We will kind of dive into that. And I'm going to give you a quick little update of what happened in the price action today. We're going to do some analysis on the charts, and I will be very specific of what I think is going to happen moving forward. Today, I think was a very pivotal change in the market. So before we begin, do me a favor, hit the like button and subscribe, and let's jump right into this video. So what exactly is the end, right? I believe the rate cuts or the rate hikes from the Fed is what's in the end right now. I believe that the Fed came out today. They raised a quarter basis point. I actually thought they might do a half basis point just to kind of shake up the market, to really kind of hurt the market. And they did exactly the opposite of that. They actually raised 25 basis points, but they talked pretty bullish, in my opinion. And things are kind of lining up, and I think this is the end of the rate hikes. They may do one more, but I actually don't think so. This might be the last one that they do. And what this does is it gives the Fed actually a very clear soft landing to everything that they've been doing for the last year. And like I say, the Fed cannot be trusted. The Fed is clueless. When transitory or when inflation was running rampant, they said it was transitory. They're always on the wrong side. But kind of like a broken clock that's correct twice a day, this is one time where I think the Fed is actually going to be right. Now, I will give a caveat, and in the beginning of this video, I also said this may be the beginning too. And what could be the beginning? This right here, right? Now, I'm not bearish. If anything, I am more bullish. So let's kind of dive into this and see, and I'll give you guys my bullish and the bearish side of what I believe is going to, or how this is all going to play out. So, but first, if you want to help support my channel, get some trading education, and also get weekly S&P Emini trade zone levels, support, and resistance, then you need to sign up with my $99 lifetime subscription, one-time payment of the S&P weekly trade zones, where you will get support and resistance levels, any open gaps and VPOCs, and you will also get a 7-hour video course of my top 5 trading strategies that I go over, that I use on a daily basis. Also, as a bonus, you will get over 30 free Thinkorswim custom indicators and charts, and you will get on a weekly basis every weekend Thinkorswim share chart, so you can upload the drawings directly to your charts. If you use another brokerage firm, here are all the levels that you'll be able to draw your own levels on. So make sure you check out daytradingfearless.com to sign up, or the link down below. Again, $99, but back to the video. Okay, so with that being said, okay, so here's where I actually think the market is very bullish, right? I think the Fed's done raising. We're right now about 4.5%. I think inflation's coming down. Things are really calming down. We're seeing it all over the world where inflation's coming down. I think the Eurozone just had like its third month of like a lower inflation numbers. Here in the US, things are getting better. We're not seeing prices go up anymore. We're seeing things really stabilize. So I think the Fed is going to pause in the March meeting. I think the jobless claim numbers might be a little lower. They come out this Friday. Those numbers are going to be, I believe, right. I want to say my number is going to be like 120,000. We'll see what happens. But with that being said, I kind of feel like things are okay here in the U.S. And I'll give you a really good example. I live here in Las Vegas. And yesterday, I went to a couple brand new home builders, right, to go look at houses. And these are the same houses I looked at maybe 6 months ago because I kind of wanted to see how much things were right at the beginning of when they started to do the rate hikes. Actually, it was probably like 9 months ago. And guess what? Brand new homes, those same exact homes are actually higher than they were before. And then I was speaking with these people, and they actually said, or the salespeople, and they said that ever since like January, the beginning of the year, they've been ramping up. Their one home builder said they sold 19 brand new houses. Another one did 45 just in the month of January. A third one said I think they did like 32 new homes. So things are actually looking pretty good, I believe. And so let's kind of do some analysis on the charts, okay? We have 1, 2, 3, 4, right? And guess what? On the fifth one, we're breaking out. We also have right here our neckline, okay? And then we have our inverse head and shoulders, okay? So things are setting up very, very technical. Now, last weekend, I said in my weekend video, I actually think the market's going to break out, fake everybody out, and then reverse. And if we come back into this diamond or this wedge right here, we're probably going to come all the way back down at least to this 37 level right here, which is also the value area low. But after listening to the Fed talk today, they were very bullish, and I actually think they're doing this by design. I think that they're trying to make them kind of say, hey guys, we're just going to sit. We're not bearish anymore. We're seeing inflation, CPI, GDP, all that. Everything's starting to look good. Things aren't going up. Gas isn't going up like it was. So there's a lot of different things going on. And I think the Fed's saying it. Now, one thing the Fed sat there and said was they keep seeing or they're going to keep rates longer. Of course, they're going to jawbone. They're going to say whatever they need to. But with that being said, I think they need to be very careful. So let's do and I mean very careful of what they say. They don't want to be too bullish, but they're also definitely not bearish like they were. And this is why I'm actually changing my tune, and I'm actually getting very bullish. We could see right here at this 42 level, okay, we have the 50% level. Right around 4,200, we have a low volume node, which is right here at 43, and then we have the 61.8 right around the 43.60 level, and that's from this entire move for the entire year, right? So if we bounce, come back up, this is where I think price is going to have a little trouble getting through, and then we could probably turn around and kind of bounce around, maybe come back down and start to sell off. I don't see us going to all-time highs right now. I think if the market gets too bullish, the Fed will talk it down a little bit if it gets too bullish, but I think they're okay with letting the market rise. Now, let's draw our Fibonacci extension just from this leg right here. Okay, if we go from that low to this high, okay, and then back down, let's see if things match up. Well, guess what? They really don't, right? Because you got the 50, the 127, the 1618, 1618 for here, right? So the way I would play this is something right inside this level, okay, probably right between this 43 to 43.60 level is where I would look to be if you're long, maybe start to lighten up. But if you're looking for shorts, that might be a good place. Again, none of this is trade advice, just trade ideas. I'm just some dude on YouTube. But I am actually very bullish. The only thing that could get me bearish in this market right now is if we close, okay, if we get back below and we close below this 4,000 on the daily close, I will be like, okay, dude, this was definitely a false breakout. But again, that's a good, 100. I mean, we're at 4150, right? So we're probably a good 150 points away from that level. So hopefully that kind of helps. But yeah, I think the Fed is done raising rates. It's over. Again, they may do one more, so don't hold me to it if they do one more. But I think we're good. They're going to let everything ride out, and this is one time the Fed might actually be right. And we actually have a soft landing. Like I said, real estate, people are buying houses, and I think people are just being okay with paying higher interest rates. But guess what? They now, if something happens and they ever lower rates, or when they lower rates, they'll be able to refinance and get cheaper rates. And then that'll push the housing up more. So hopefully that helps. As always, thank you for watching, and we'll talk to you guys soon.